Welcome back to the Middle Tech Podcast. You've got Logan Jones and Evan Knowles here recording out of the Sales River studio. And we've got some interesting stories to dive into today. We're going to be talking about a foreclosure lawsuit against AppHarvest, so kind of an update to the last time we talked about their filings. Tesla winning the electric vehicle charging standard, making a deal with GM, and some crypto regulations. So we've got both Binance and Coinbase have had lawsuits filed by the SEC. So we're going to be getting into all of the minutiae around regulation and crypto. But before that, we've had a pretty crazy week in the sports world, or I guess last week by the time this comes out. And I just feel like we should hit on that real quick. We had a crazy Messi deal. So Messi is now coming to Miami, which is insane when you really get into the details of that deal. And then we also had the Live Golf PGA merger. So we don't have to talk too much about those stories because they don't touch tech, but I think it is worth just mentioning at the front here. It's pretty crazy stuff.
Saudi Arabia is throwing around some serious money. I think it's a really bad look as far as the golf
hypocritical
move goes with the PGA and Live. You know, PGA's really putting themselves in a bad position, especially for the players, but also just their brand. So we'll see what ends up happening from this point forward. And then on the Messi deal, you know, America seems to be where international superstars go to end their career, but David Beckham did the same thing, and I wouldn't be surprised if Ronaldo does it too. Yeah,
well, the Messi deal is just crazy because he's getting a rev share deal with Apple and Adidas. So, you know, he realizes the impact he's going to have on the game here in America, how much he's going to be able to grow it, and he gets to have a cut of that revenue, of that growth, both through Apple because they have that exclusive deal to have all of those games on their Apple TV Plus. And then with Adidas because they know they're going to sell a lot more shoes. So it's pretty crazy. It's an awesome deal.
Miami is a great spot too. I mean, a lot of Latin American influence there. And it's one of the fastest growing, you know, cities culturally in the U.S.
Yeah. Somebody will have to do a case study on how quickly that brand grew once he actually joined. But some of the initial things that have come out about it was like their Instagram account had, I think, 1 million followers before Messi joined. And then within like hours of him joining grew all the way up to 4.5 million followers on Instagram. Yeah. So it's like, it's the Messi effect. I think it'll have a really significant impact on soccer in America. So I'm excited to see where all that goes. I think I might start getting into soccer. I've really never watched it, but I mean,
Messi's going to get you into it, huh?
To see one of the GOATs playing in America. I mean, yeah, for sure. Yeah. For sure. All right. Before we dive into these stories, we just want to get a quick word from our sponsors. Before highlighting our sponsors, we'd just like to state that the views and content shared on this platform do not necessarily reflect those of our show sponsors. Middle Tech is presented by KY Innovation, the Kentucky Cabinet for Economic Development's Office of Entrepreneurship. KY Innovation exists to support and develop Kentucky's startup ecosystem, and we are proud to be supported by an organization whose mission aligns so closely with ours. If you're a founder building in Kentucky, you need to check out the resources that KY Innovation has to offer. You can find more information by clicking the link in our show notes or going to kyinnovation.com. Middle Tech is sponsored by Bolt Marketing. Take your website to the next level with a website that's built to work. At Bolt Marketing, they're revolutionizing websites for small businesses that are affordable, customizable, and hassle-free. Whether you have a construction company, a boutique clothing store, or you own a hot yoga studio, they have options for you. Click the link in our show notes to explore their marketing options that can transform your marketing and grow your business. And as a personal note, Bolt Marketing built our website, and they were awesome to work with throughout the entire process. We highly recommend working with them. All right, so for this first story, like I mentioned, we discussed a lot of updates with AppHarvest when they disclosed a lot of different material events going on in their business, getting close to running out of cash, getting close to defaulting on some of their debt, among other things. Kind of an update to that, and that is a foreclosure lawsuit brought against them by Equilibrium Capital, one of their creditors. So Evan, give us the details of the story. This is more of an update to what we talked about last time, just kind of seeing the sequence of events as things get a little bit more rough for AppHarvest here. But go ahead and dive into what's going on.
Yeah, so Equilibrium Capital is owed $66 million. Equilibrium was also a very large investor from an equity standpoint as AppHarvest was raising money leading up to their SPAC. So essentially what's happening here is AppHarvest is defaulting on loans. They're not making payments. They're also not making payments to contractors working on their facilities. And Equilibrium Capital is saying, hey, this is collateral. We want that collateral and we're going to sell it. And because we need to make up for our obligations also to our investors, that gave us this money to lend. So it's a pretty big deal. It's definitely a really bad situation for AppHarvest to be in. So this is talking about their Richmond facility. Their Moorhead facility is also very at risk. Their lender on that is Rabobank Group, which has a $70 million claim on the Moorhead facility. So I would imagine what's going to happen here is both of these are going to be liquidated in foreclosures. And I would say AppHarvest is probably just going to go out of business and unfortunately kind of disappear. The brand will, because if they don't own the facilities and they're not profitable for the brand to stick around, then I would imagine that somebody's going to come along and buy those facilities, Masternardi or another kind of established greenhouse grow operation. Is what I would foresee happening here.
Yeah, unfortunate all around. I guess just a quick disclosure, that's not financial advice anyway, just since it's a publicly traded company. But yeah, like we said in the original time we kind of covered what's going on, we'll probably be seeing more news around these types of things going forward. But that's just more of a quick update. Let's move on to this next story, which is Tesla has essentially won the standard for electric vehicle charging. So they have one of the largest charging networks. The largest in America, certainly. I believe I saw something that said almost in North America as well. So the whole continent. But talk about what the dynamic here is with the two different standards that we're kind of competing, and now how Tesla has gotten a deal with GM that's going to really put them at the front going forward.
Yeah, so Tesla had first mover advantage. They by far got the most charging stations across the country. They're also the fastest charging stations in the country. They have the best technology. They were competing against another standard called CCS, which was largely backed by the internet, or the government rather. And other car companies outside of Tesla were adopting CCS. But GM and Ford are ramping up their EV fleets and their manufacturing. And in order for consumers to be comfortable buying those vehicles, they need charging stations. And Tesla by far is, again, the biggest network and the most convenient locations, and they're the best technology. So in the short term, GM and Ford are looking at this as an opportunity to expand their market share, because they can't both build electric vehicles and a charging network and stay focused. Tesla managed to do it, but that's just because they focused on electric vehicles and the infrastructure around it, whereas GM and Ford up to this point are still operating ICE vehicles. And so, it's just a bad kind of situation for GM and Ford to be in, and this is their really only way out to kind of bridge the gap between now and when the EV future is here and arrived and everybody's buying electric vehicles. So this is a huge deal for Tesla and Elon.
Yeah, I think my thoughts around getting an electric vehicle, because I've wanted one for a while, but one of my things I've always just been kind of critical about the space is until charging stations are as convenient as going to a gas station, like I don't have to go across town to Meyer to go and charge a Tesla. That was going to be kind of my barrier of entry to getting an electric vehicle. So I think it's smart to be partnering with Tesla, who has already created the largest charging network in the country. And on top of that, we've seen, I think on Middle Tech even, we've posted some of the mock-ups around different concepts that Tesla's trying to do with like the actual charging station experience. So I think that that type of creativity and creating kind of a whole new customer experience around coming and charging your electric vehicle, it should give rise to all sorts of new experiences and new business models around the way that the differences between charging an electric vehicle versus just pulling into a gas station to charge your car. So I would imagine that charging is going to get shorter and shorter times and be closer and closer to fueling a car. But I do think that future is probably a little bit ways away, just because battery technology has to improve in order to make that charging time shorter. So anyway, I think it's awesome that Tesla has another kind of chess over checkers move here and played the long game and positioned themselves strategically, and now they're benefiting from it. So
yeah, I mean, a few other things to think about here is, one, this is billions of dollars in revenue for Tesla. They traditionally have been charging non-Tesla owners a lot more for charging than their own Tesla drivers to utilize this network. So now I would imagine they're going to split some revenue with GM and Ford on this. So it's going to be a lot of incremental revenue over the next several years, and it's recurring revenue. And then it's free marketing. So whenever somebody goes to charge their car, it's going to be a Tesla station. And so, Ford and GM owners are going to be looking at Tesla charging stations, and they're going to be thinking about, Tesla. So it's a big opportunity for Tesla from a marketing perspective. And then Tesla's also moving heavily into services. So over the last year or so, they've announced that they'll allow other companies to license their full self-driving. The battery tech is no different. So providing electrification and charging for the other car companies is considered a service. So their services revenue is going to grow substantially. And this will lead up to, their robo-taxi fleet. So pretty big opportunity. And this is basically just going to allow them to underwrite and invest heavily in a larger network. So GM and Ford are essentially going to be funding Tesla's expansion of their charging. So again, Tesla and Ford and all the other legacy car companies are probably going to look at this as a loss for them, but a necessary loss in order for them to bridge the gap again to EVs. I think Tesla's just completely dominated the space.
Yep, no doubt. Let's move on to this last story and talk about regulation in the crypto space, something that has been a topic for a while, but nonetheless has been lacking in the crypto space. So first, let's just give some context to what type of regulation has been lacking. So under traditional financial institutions, you've got the SEC that regulates them, and that is typically around securities. And so now the regulation that has been coming forward is all around classifying crypto as a security and saying that it needs to be registered with the SEC to provide more transparency and regulatory oversight into crypto and the exchanges that facilitate a lot of the transactions in the crypto space. So now both Binance and Coinbase have been named in the lawsuit by the SEC for not registering some of the crypto assets on their exchanges as securities. So I want to pause there and just define what a security is, because I think part of this discussion is trying to figure out where crypto actually fits within the existing framework. And to me, it sounds like it doesn't, and it sounds like it's going to have to be updated to make this all work in the way that it needs to for the crypto space to continue to grow. And so a security is defined as a fungible, negotiable financial instrument that holds some type of monetary value, and that's typically equity, debt, or a hybrid of the two. So that kind of crypto already kind of falls outside of the equity, debt, or a hybrid of those two. So I think it would be kind of its own category of security. If it is a security, I think it's going to be a spectrum of saying, is it a security? Is it a commodity? Is it a currency? And I think it just kind of depends on the crypto project. So that's the first thing that I kind of wanted to lay the groundwork on of why these lawsuits are coming up. And now, the SEC chairman, Gary Gensler, is basically asserting jurisdiction over the entire crypto industry right now and arguing that most of these tokens should be classified as securities, which is what would give the SEC insight and transparency and regulatory oversight into everything that goes on these exchanges. So, Evan, I'll let you dive in from here and talk a little bit about some of those tweet threads that we were talking back and forth on and kind of what was contained within those, because I thought those were very detailed, very unbiased. I think that was another point that stood out to me there. So give your perspective on kind of what's going on within the space right now.
Yeah, so essentially what's been going on is consumers have been engaging in financial practices with cryptocurrencies, crypto assets. There's all kinds of different terms and types of crypto assets, and it's really been the Wild West. It's been pretty dangerous. A lot of people have lost money. Yep. There's very little transparency, and what that leads to, again, is consumers being hurt. And so Coinbase, if people are exchanging these assets on their platform, is somewhat liable to making sure they protect consumers. And so they need to be registered as a broker via the SEC. And so this is something that I think can end up being a very positive thing for the crypto space. I think this is just a stage in its growth. When any new technology comes onto market, there's a period of time where, many people might take advantage of it for good and bad. And those that are doing good in the space want regulation, because when the government steps in and regulates something, that means consumers can have a sense of trust. And consumers need a sense of trust with crypto. And I think that is really needed now, because if you look at the amount of transactions happening within the crypto space right now, it's fallen, 90+%, close to 99% since the peak in 2020 and when all things were going, really crazy. And so the crypto space needs this to mature and see its real vision if it was ever going to be a real thing. You can argue that, Bitcoin and Ethereum have been the most steady, and others that follow have been, extremely volatile and dangerous. But if somebody has a great idea in the crypto space, then they're going to want regulation. The United States is just not going to tolerate kind of the Wild West when it comes to financial markets. We never have. And so it's really important that we kind of take this time to make sure that Coinbase, Binance, and others are, good custodians of consumers' money and wealth. So that's what's ultimately going on here.
Yeah, and it seems like a lot of these lawsuits will be focused on why they need to be registered with the SEC, and that mostly revolves around the internal processes of how the exchanges operate and making sure that consumers or investors are protected, all around when they're putting their funds and investing in these assets. I think aside that a lot of these, the founders of these exchanges are trying to take, or that these assets could be considered commodities. So it's kind of a spectrum that you have to look at these on, or maybe a spectrum is not exactly the right word, but they're trying to put crypto in these different categories. And you've got securities. You've got some people, mostly the founders of these crypto exchanges, saying they're more like commodities. Commodities are defined as a basic good used in commerce that is interchangeable with other goods of the same type. So you could maybe say that, one Bitcoin is the same as another Bitcoin. But those commodities are most often used in inputs in production of other goods or services. So it doesn't really fit in commodities either. And then there's the whole currency argument as well. In my opinion, I think that if we can get to a point where we get good, solid regulation around the crypto space, I still don't know if it'll ever live up to what a lot of people in crypto, I think, want it to live up to, which is this decentralized financial space environment. And I say that because I don't think the government would ever want it to get there. They don't want to lose their control over, fiat currency and their ability to manipulate the economy and the market through printing money or through having control over the monetary supply. Now, I think that if that were to be like the future of Bitcoin, that's a very, very far out future, and there would be a lot of pain in the economy for that to actually happen. But I think that if there are still people in the crypto space that are holding on hope to that future, I think that that's getting less and less likely for that to actually come true.
I think one thing that they're leading up to, they've been doing this for a while, releasing new financial technologies from payments, across banks. Regulation in this digital asset space is very important because, at some point, the U.S. is going to release their central bank digital currency. There's a lot of mixed opinions on that, but the government's definitely moving towards a digital currency. And I think that they need to do this first so they can define what's going on in the digital asset market so they can launch their own and make sure that there's clarity in this market and trust before they layer theirs in. So I think ultimately this is a larger picture item here, and Coinbase was the first one that really kind of was on the podium because they're the largest. So I would assume that this is very calculated and timely for the government. And Binance is looped into that too, despite the fact that they're not a U.S. company, because if people are going to be exchanging, these digital assets, the government needs to make sure that they have oversight and insight into that, so that when they release their own, it's calculated.
That's a great.
I think that's what is going on here.
What do you think the U.S.'s digital currency would be backed on? Just as a thought experiment, you got like Bitcoin, that's basically proof of work, proof of the computation. That's what the value essentially comes from. What is the U.S. is backed by?
The U.S. dollar isn't backed by anything right now.
It's backed by the military. It's backed by military power.
Well, yeah.
That's
what's theoretically what's backed by. Is
I don't think there's the
U.S. power to enforce the U.S.
Exactly.
U.S. dollar, but it's not going to be. I doubt it's going to be backed by anything.
I know, which is Anyway, that's a whole other conversation. Anything else you want to add to the crypto conversation before we move on to the AI Edge segment?
Nope.
All right, moving on to the AI Edge segment here. AI Edge, stories, tips, and topics for gaining an edge with artificial intelligence. This week, we want to discuss briefly Adobe getting into the generative AI space. So if you've been on Instagram, I've been seeing a lot of different videos and memes popping up using Adobe's new Photoshop generative AI fill. So this is kind of their suite of incorporating generative AI into their products, which was such a ripe opportunity for Adobe to do in the first place, just really leveling the playing field for creatives, making generative AI even more accessible to creatives. And their generative AI Photoshop fill is really knocking it out of the park. So that's primarily the story, is that Adobe has gotten into this, and now they're even expanding the access to that to enterprises as well. So if you have not seen any of those videos, I just encourage you to go on YouTube or TikTok, or actually Instagram. Don't go to TikTok. We don't like TikTok here. Go look for some of those videos and just kind of see how it works. You can essentially just on Photoshop be able to highlight an area that you want to use generative AI on. You type in what you want it to actually produce for you, and then boom, you've got a new image that can be created through that. Our designers at work have been playing with it. It is pretty incredible and pretty powerful. And I think the main takeaway from this is that it's leveling the playing field. It's making it so much easier to make very complex graphics, because you can just use natural language to express what you want, and generative AI kind of takes care of the rest. Have you played with, I know you played with Dolly. Have you seen much about this? Do you have any opinions or takes?
Yeah, I mean, I've just seen a lot of demos on Twitter. I think what's happening here is one of the tough things about the artificial intelligence space that we'll see play out is you've got probably a lot of startups that were doing just specifically this, generative images that, whether it's Dolly, Midjourney, and there's many more that were incorporating, let's say, social media graphics and generative AI. The enterprises that already have large user bases are going to swoop in and layer in AI. And so, Adobe just took out, a ton of startups that might have been trying to build this. So that's one thing to just watch for, is enterprises that, were existing players in a space that, were not built around AI, but can just easily layer it in. So that's kind of a question going forward, is do you need to rebuild a company from the ground up to be an AI company, or can players like Adobe just layer it in? You can see that people don't care that Adobe's been around for a long time. All they care about is how exciting the technology is. So we'll see that continue to play out across all software verticals. And Adobe, I think, is just a great example. HubSpot, Salesforce, and others will follow in their own verticals. But I think that's my interest in this is, as an entrepreneur, how do I need to think about, big legacy players versus building from the ground up? Because again, AI is really just an API that you can plug into anything.
Yeah, and I think that's the broader trend to take out of this, is that we're moving towards this phase of software where even the legacy softwares that we know that might have been very complex softwares to learn and have a very steep learning curve, like something such as Photoshop, are now going to be able to be supplemented by AI. And what that essentially means is AI is allowing us to communicate with software in the way that humans naturally communicate in general, which is natural language. So I think the broader trend is that, like with Photoshop, you can now just use natural language. You can say, here's exactly what I want to create, and it can do the rest. And I think that's the trend to watch in some of these legacy technology and software platforms, is we're now going to be able to interact with them in more of a natural language way, much more of a natural way for humans to interact with software. And I think that's going to change user experiences for the better, make software more accessible to more people, and probably just grow the overall market value of software by just introducing more people to it and making it more accessible.
Yeah, Adobe would probably make this free again. And if you're a startup and Adobe has it for free, what are you going to do? So that's
what
just
going to do.
Yeah,
not much you can do. All right, AI tip of the week before we wrap up here. This one is going to be around doing financial research, because we have used this for our research into AppHarvest. We've been using this at work for creating blog content and just analyzing different financial filings. And that is using ChatGPT. If you have the internet access version of that, you can simply put in the investor relations page on a website, say, such as AppHarvest. You can say, please provide me quarterly earnings updates. Please provide me year over year growth or decline of a certain metric. And ChatGPT can go and give you that in a table format. So that's really the tip of the week. Pretty basic. Use it to do your financial research. So Other than that, we hope you guys got something out of listening to this podcast. Thank you guys for tuning in, and we'll see you next week.